Hello guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So hopefully you guys out there are doing great and then watching so much of my videos or my previous videos and learn a lot of things. All right. Not only that, of course, I hope it do improve some of your knowledge on supply and demand, and also gain, if possible, gain a bit of money from the market. All right. So I'm not saying that I'll encourage you guys to test it out right away, but at least it will improve whatever knowledge that you guys already have. All right. So today I'm going to make it more complicated. Yeah, like what I have said, things are going deeper and deeper and deeper. All right. So today I will introduce you to a few more complicated terms. Uh, Names, by the way, names are just names. All right. So it does not matter what name it is, as long as you know the function of it and the character of it. All right. So today we'll talk about maximum pain level. So on the previous episode, I already introduced to you what is a Quasimodo, the type of Quasimodo, and of course, I'm gonna introduce you to the type of price action. All right, a few types of the price action, and we're going deeper and deeper. So of course, now we're talking about the maximum pain level. So which is very very important if we are trading a QML. All right. So let's look at what is a maximum pain level. So now let's assume that we have a very normal, all right, we have a normal movement of a price, all right. So there is a price going up and down, and it creates what we call it as a resistance over here. All right. So if we give a lot of traders out there, I would say that the traditional traders or those newbies traders saying that price will always reject at the resistance or always reject at the support. So is it true? Actually, it has a certain amount of should I say uh concept that is true, but you have to a lot of you do not learn or do not understand the whole concept. So what we have here, we have a resistance. So we have a R1 and R2. We'll label it as a R1 and R2, resistance 1, resistance 2. So what happen eventually is that the price will reach this area again. All right. So for new traders or a lot of traders out there, they might think, oh, the price will reject this time because it has rejected twice previously. All right, yes, rejected twice previously. So eventually, what happened was that a lot of people will sell at the resistance. All right, like previous one, but sorry, and then they will place their stop loss over here. All right, so but something happens. All right, the price does not stop at the resistance. It bulldozes all the way to the top. All right, it bulldozes all the way to the top. So a lot of you will get their stop loss hit, and then you lost your money. All right, you lose your money. Then eventually the price came down to this resistance again, but now it has become a support. All right, it has become a support. So we're gonna label it as a S1 and S2. All right, and the same thing. This is the same thing. So a lot of you will be thinking, yeah, this time around, this is a very, very, very strong resistance or support. So the price will rebound. All right, will likely to rebound. All right, so you'll place your stop loss below. But what happened was that the price came down all the way and hit your stop loss. It will hit your stop loss, right? Then you got very frustrated because you have been selling, all right, at the rejection. You have been selling at the support and resistance. Now the price reached this area again, resistance. It creates another resistance, all right. It creates another resistance. Now some of the trader, they might think, okay, it's time for me to change my strategy. Instead of buying or selling from the rejection of the support and resistance, now I'm going to think about breakout trade. All right, I believe a lot of you heard about it, the breakout trade. What does it mean? That the price, once it break out from this support and resistance, I'm going to follow the trend. I'm going to follow the trend. All right, the trend is my friend. I'm going to follow it. So eventually what happened was that you're going to place your stop loss above, sorry, and then your stop loss got hit, and the price came down all the way. All right, the price came down all the way. So this is what this line over here is called the maximum pain level. All right, this line over here is called maximum pain level. So one of the reason is that uh, if some of you do not understand, a lot of the big trader, the big banks, they can see your pending order, and they, of course, they can also see your stop loss. And like when I mean they can see is that it's not particularly your trade, all right? Because how many lot can you put in? 100 lot, 200 lot, 300 lot? That is nothing. But they can see, how should I say, majority of the people placing their trade and their stop loss. And that is where we call it as the liquidity, all right? That is where we call it as a liquidity. And the price is where the big bank will gonna push the price over there and hit your stop loss so that they can gain their money. All right, they can gain their money. So this line over here is the maximum pain level. So what we have is the simple character of a maximum pain level. So first is that maximum pain level happen because of the greed and the fear of a retail traders. All right, if you remember on the first episode, I already told you about the big bang is the shark. All right, you guys out there are just the sardine fish. All right, the small fish. So it happens because of your greed, all right, and your fear. All right, the big bang, the big trader, they know where you place your stop loss and your pending order. So maximum pain level is created by the big trader to hunt stop loss of S and R traders and breakout traders. So it's very, very simple. A lot of people, when we start learning of trading Forex or whatever, we'll talk about the SNR traders, or we talk about support and resistance, support and resistance, support and resistance. But the real meaning of support and resistance is what a lot of people do not understand. Then, of course, a lot say that, oh, now we're talking about the breakout trader. Means that when the price break out from the support and resistance, we'll follow the trend. The trend is your friend. The trend is your friend. This is also a mistake there. Of course, I won't say that it does not work, but just that the probability is very, I would say not very high. I would say very low. I would say not very high. All right. So the third character is that as an advanced supply and demand traders, we look at normal traders stop loss position. So we must know. All right. Now we have to think the other way around. We think that ourselves as a big trader, our big bank, we always think that normal trader, where does they place your stop loss? So that is the position that they place your stop loss is where we will entry. All right, that's where we will entry. And now what we're doing is that we follow the shark. All right, we are no more the sardine, we are the shark. Right, you have to think their way around. So actually, if you look at the whole thing, maximum pain level over here, what does it looks like? Yeah, it's starting to get a bit complicated, right? It's starting to get a bit complicated. But overall, what does it looks like over here? It actually is a QML. So if you look at it properly, right? If you look at it properly, so we have high, low, all right. Then it's a break to the high. It's a break to the high, and when it comes down, it creates a lot of many things, many funny things before it breaks the previous low. All right, before it breaks the previous low. So this overall is actually another, I'll say another form of QML. All right, Quasimodo level. And the important is that we are not looking for QML. All right, I repeat, if you watch some of my previous videos, I already repeat every time. I do not consider QML is my entry point, because QML is just a signal telling me that there is a reversal, or even we call it as a continuous continuous trend, but it's some sort of reversal also. What we are looking at is the maximum pain level, where a lot of big retail trader will place their stop loss. That is where we're gonna place our entry. All right. So some of you guys cannot imagine what I've just told you. The maximum pain level. All right. This is exactly how it looks like. So how does a lot of people cannot imagine, how does it interpret into a QML? How does it look like in a QML? So it's very simple. I'm going to label it as usual, R1, R2, S1, S2, and R whatever it is. Then this is our maximum pain level line. All right, we have a maximum pain level line. And this is what it looks like. All right, in a simple form. All right, it looks like this. It looks like a, all right, high, 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 low, ultimate high, high. And then there is a manipulation. The price suddenly pick up before it falls. All right, this is the decision point. Another term that I'm gonna introduce it later. This is a decision point where the price is likely to come back to this area before it falls. So does the another common question a lot I always get is that, is it the maximum pain level always aligned with the QML? No, there is no always. Sometimes the MPL will be lower. All right, hear me properly. Sometimes the MPL will be lower than the QML. Sometimes the MPL will be higher than the QML. All right, and then sometimes it's at the top of the head. And not only that, sometimes MPL does not exist. All right, for some trade, MPL does not exist. But however, for normal trade, MPL does happen. Right, it's just that in a matter of switching to time frame, smaller time frame or higher time frame. You have to look at it and search for it. Right, it's very, very obvious. It's very, very obvious. How obvious it is, you have to train your eye. Of course, I'm going to give you a few examples. All right, so now let's jump into the chart, and then I'm going to show you how I'm gonna identify the QML, and of course how I'm going to identify my MPL. So I'm going to do it step by step, so listen to me properly. This will be purely on the sell setup. All right, so later I'm going to show you a buy setup. Right, it's the same thing. It's just that how we're going to flip the chart. Okay, so first of all, what is the condition that we are looking at right now? If you can see that the price is actually moving or breaking the previous high, right? That is always keep breaking the previous high. Wait a minute. All right. So it's keep breaking the previous high. So making this is a bullish, all right, bullish trend, all right, bullish trend. Right. Okay. So it ends somewhere around here. Right. So let's follow and see what happened next. So if you can see that all this while, there is no breaking of previous low. There is no breaking of previous low. But however, when it reached this area, sorry for that, when it reached this area, this is the low, right? You can see that it's a very, very obvious low right here, right? So the price eventually came down, all right? It eventually came down and breaks the low, right? I'm going to remove all this arrow line dotted purple line. So eventually it came down and break this low, right? So it is a very, very obvious break. It's a very, very obvious break. So this is a qualified QML setup. So how we are supposed to do is that I'm going to take a horizontal line, right? Horizontal line, but I'm going to use the trend line as my horizontal line. So let's place it. So this line here is what I consider as a QML. And always label it. Always label it, because you're just learning. All right, you're learning. You must know where's your QML. So where is your ultimate high? It's right here. Right, the ultimate high is right here. It's so obvious. Ultimate high. So when it came down, it makes a lot of funny stuff. All right, before it jumps, it came down all this way. So eventually, this is a very good setup of a QML. All right, QML. And how you approach this trade? So it's very simple. So I'm gonna place another line over here. All right, I'm gonna place another line. So this line is nothing. I'm gonna change it to red color first. Sorry for that. I'm gonna change to red color. So this line over here is what I consider as a MPL, maximum pain level. So how I'm supposed to find my maximum pain level? Step by step, first you have your line. All right, you have your line. Then you place your line at the area where there is a lot of rejection. All right, a lot of rejection, and it's somewhere around here. Somewhere around here. All right, somewhere around here. I'm going to remove my QML for this moment so that you can see. It's somewhere around here. If you look at the graph, that I shown you just now, I'm looking at a area, all right, that is something like this. All right, I'm looking at the area something like this. Maybe I'm gonna change it to how I'm gonna change it to dotted line into line. Yes. All right. So it's more obvious. So this is what I'm looking for. This part over here is what I'm looking for. So this line over here is my uh, MPL. This is my MPL, maximum pain level. So similarly, I'm going to label it my maximum pain level. All right. Maximum pain level over here. And what do we have? Resistance. How many resistance do we have? How many rejection do we have? Right? How many resistance and rejection? So if you look at it properly, I'm going to place it a bit lower. Right? So we have a lot of rejection over here. All right. And we have the indecision over here. This is what we call indecision, or we call it as a base, all right, rarely base drop, indecision, right? And we have a lot of rejection, right? If you can move it even lower, it's better. So rejection all the way, so many 1, 2, 3, 4, 5, and then came over here. There is a lot of rejection, another indecision, drop base rally, drop base rally, all right? So when it reached this area, you can see that there is a lot of rejection, all this rejection, and that it's a rally, base rally. All right. So what happened is that the price, if you look at it properly, the price came up into this area before it plunged down and then breaks the low. All right. It breaks the low. So this is a qualified QML, MPL. The QML is on the top, but it's not important. So this is the MPL. So where do I enter? So basically your enter area is over here. All right. Your entry point is over here. All right. Basically your entry point is over here. However, it depends on how you look at it. So sometimes I might place it just like this. All right. I might place it just like this. This is my entry zone. This is my entry zone. All right. So what happened? Let's see the seed come back to this area. All right. Just wait patiently. Right. So nicely done. You can see that the price came into this zone, this small little zone, before it continuously going down. So like what I tell you, is it accurate? It depends on how you look at it. So some people might argue, if that's the case, why don't I just use my QML? Even if I place it at the QML, my entry at the QML is correct, right? It's correct. But this is not the part that you'll be looking at. The important is that you must look for something like this pattern. This is the important MPL, maximum pain level, right? Hopefully I am not trying to confuse you guys. So this is when it comes up, plunge down, I'm looking for a zone, whatever zone that is fresh. For me, this is very, very fresh. All right. So eventually the price, let's exit from the replay mode. Where is my chart? Right. It's over here. Right. So if you look at it, the price came into exactly this zone and then continuously going down. So how big is your risk reward ratio? I think it's quite big, quite big, quite big. It reverses all the way. It reverses all the way. And eventually over here, you have another QML. If you can see it properly, you have another QML, but this is a continuous trade. All right. Price moving up and then punch down and then comes back to this area before it continues going down. Right. You will have a lot of opportunity of trades. Right. You have a lot of opportunity of trades. It's just that a matter of how you're going to look at it. How you're going to look at it. All right. So this is a very nice example of a QML buy. Right. It's a QML sell. sorry for that. Where is my chart? Over here. All right. So let the knowledge sink in. All right. Let the knowledge sink into your mind. Look at it. All right. Hopefully, I don't confuse you guys. Consume it. This is a very perfect example of how you should be finding your QML first, and then follow up by your MPL. All right. Then find where is the rejection, the area where it rejects a lot, and area where there is an indecision. All right. And suddenly the price came up before it plunged down. Right, before the plunge down, and this is a nice place for your entry, a very, very nice place. And of course, in between there is some I will say there is some price action, some type of price action, which I'm going to show it in the next video, in the next episode. Right, so this is a sell setup. Right, so next I'm going to show you an example of a buy setup. All right, it's a flip of the chart. All right, so look at it. Let's follow the trend. So what happened is that you can see the trend is going lower low, right? Let's follow the trend. Low, high, lower low, lower high, and keeps breaking the low. All right, it's very obvious. It keeps breaking the low, and it creates the ultimate low at this point. All right, at this point. So this is the ultimate low. All right, so I'm going to get this arrow line out so that you guys can see properly. So what happened is that is the price rejected over here, and a lot of people will argue that this will be a double bottom setup. It depends on you. It does not matter. For me, I don't look at double bottom, double top. I just look at focus on the QML, the QML itself. Right, so let's follow up this, which is the higher, the previous high. All right, this will be the previous high. So this is lower high. I'm going to label it as lower high over here. All right, so lower high. So important is that the price has to break this area, has to break this area. But now let's look at the condition. Has it broken this high over here? No, not right. So it's not qualified as a QML yet. So let's wait and see. Right, right. So now, does it qualify as a QML? Yes, it's qualified as a QML. So what we're going to do is that we're going to label things slowly by slowly, and we're going to find our MPL, and of course the area where we're going to have our setup. All right, have our entry. So this is our QML. All right, QML, the Quasimodo level for a buy. Right, is it important, or should I enter directly over here? So if you enter over here, where is your stop loss? It will be a very, very huge zone. Right, it will be a very huge zone. So I'm going to place it somewhere around here. So it will be 46 over pips. Right, it will be 46 over pips. Is this what you've been looking at? If it is, then go ahead. I have nothing to say about it. All right, I have nothing to say about it. So when it breaks high, now we are looking for what I told you. We are looking for the manipulation. And in this case, if you look at it, the manipulation, where is the actual manipulation? A lot of people will argue this is the zone. This is a zone. All right, this is a zone. This might be an entry. But is this really important? Does it have any significant support resistance, any rejection behind? No. All right, you can see that nothing. Is very, very clear. It's very clear. Even I close up, look to the left some more. You can see that there's nothing. It's very clear out here. So it's not important. So a lot of people who got trapped at this area will get trapped at this area. So we just ignore this for this moment. Should I go into lower time frame? You might. All right, you might. So I'm going to switch it to 30 minutes. Easy for me to get some reference. All right, nicely done. Right. So over here, I'm going to find the area where there is a lot of rejection. A lot. We're talking about multiple rejection, those kind of rejection. So I'm going to place a line. How I'm going to do is that I'm going to place a line. I'm going to label it red color. Right. So this will be my maximum pain level. How am I supposed to find this maximum pain level? Place it at the area where there is a lot of rejection. All right. So this is the area. Right. This is the area. So if you look at it properly, this is a very, very obvious area where there's a lot of rejection, indecision, all right, and then rejection. right, is around this area. Right. So this is my MPL, maximum pain level, right? Maximum pain level, right? Other than this, is there any other place that is qualified as a MPL? No. If you look at it properly, no, there is nothing more. All right, nothing more out there. So this is already my maximum pain level. All right, maximum pain level. Okay. So what happened next is that once I go into this time frame, uh, important notes here, a very important notes is that for a sell setup, always look for a supply zone above your MPL, right? And for a buy setup, always look for a demand zone below your MPL, right? So over here, where is our zone? We only have one very nice zone, very very nice zone over here. This is how I'm going to label my zone. This is a very nice zone. So eventually, there is nothing left, all right, except for this zone. So let's see whether the seed came into my zone, all right. And when I switch it to a high time frame, there is nothing there. So let's see what happened. Let's see. All right, maybe I'm gonna place it. Let's monitor. Maybe I switch to even higher time frame. So it'll be faster a bit. It'll be a bit faster. So even if I go into higher time frame, the H4, this is another thing that I'm going to teach in later chapter. We call it as a confirmation. So once I switch it to higher time frame, we can see that there is another engulfing. This is a very nice engulfing. So this is our confirmation. All right, it's our confirmation. All right. So where is the price moving? All right, the price moving. Price moving, price moving. How come it took so long? Where are you going, the price? All right, so there is another type of confirmation is that we call it as a compression. There is a very obvious compression over here. Right, I'm going to focus about compression later. So is the price coming back or not? Not sure. So is this a fail setup? I'm also not sure. I just find it blindly, find something and just share it. All right. Oops. Wow. Oops and wow. Right. Even myself, I'm amazed. I'm amazed. How accurate do you want it to be? Right? How accurate do you want it to be? So if you look at it, if I switch it back to the 30 minutes, I did not move my zone. I did not move my zone. So this is exactly where I label my zone. Right? That's why I told you that my definition of my supply and demand zone is different from other people because it works very well for me. And stop loss. Okay, let's talk about stop loss. All right. Stop loss previously was 46 pips. So what is my stop loss over here? All right. From 46 pips, I have lowered into 5 pips. Right. So, but sometimes I have to be very honest. Sometimes I do give a bit of buffer due to the spread or due to the news. I do not know. All right. So sometimes I give a bit buffer, even I give it to 9 pips or 10 pips. Right. So let's assume here we have a 9 pips. Right. 9 pips and I might widen my zone. Right. So we go back to H4 and how we're going to exit this trade. Okay. How we're going to exit this trade. All right. So it's actually very simple. Very, very simple. Over here, you can see that there is a very, very obvious zone. All right, a very obvious zone over here. You might exit it over here. Don't be greedy. This is we call it a compulsory exit zone. Means that you either you have to exit everything or you exit half of your trade or some of your trade and then leave the rest to run it, to run all the way. So our risk reward example for this trade will be around, this is our stop loss, and this is our zone. So it'll be 1 to 15, right? It's around 1 to 15. Let's give it something more accurate. So 1 to 15. I do not know how accurate do you guys still want it to be. All right, so this is a very, very simple explanation of a QML buy and sell. And of course, you by using the maximum pain level way of looking at it, how we're going to accurately find our zone. All right, so in my next video, I'm going to show you about what is a fake out. All right, we're going to explain about fake out because I dedicate the whole next episode on fake out for you. The reason is that there is not one type, there is not two types. There will be three types of fake out. All right, so hopefully you guys get a few tips or tricks from watching my videos, and definitely I will appreciate you guys if you can just give me a thumbs up. All right, and of course subscribe to the channel so that you guys won't miss out any on the updates on this mini series of supply and demand. All right, so hopefully you guys enjoy everything, and see you guys in the next episode. Bye. Thanks.